Last week, the Bank of Canada came out with the news that they're going to stop quantitative easing earlier than expected, and that shot the Canadian dollar higher. Now, that brings an opportunity for investors that are looking to get foreign equities. So we'll be discussing what opportunities are at play. But if this is your first time here, my name's Nick. Welcome to Ways to Wealth. Before we get into the video, I'd like to ask you a huge favor. If you learn something new or you get some value out of the video, hit that like button for me. I definitely appreciate that. And if you haven't already, please consider hitting that subscribe button, turning that notification bell on. Let's talk about currency exchange. If you saw my video last week, we talked about how the quantitative easing will affect the housing market. So if you haven't seen that, go to my channel after the video, check that one out. We also talked a few weeks back about hedged and unhedged ETFs, and we'll discuss that a little bit further in detail. But let's see what's going on from this BNN article in the computer. And economists say the Canadian dollar is at a sweet spot after rising for the 7th straight day to top 81 cents in the US, a point where it benefits consumers, but it doesn't hurt businesses too much. So it traded for 81 cents US Thursday, meaning that $1 Canadian would get you approximately 81 cents US. We'll look at a little bit of a chart of where that price action has been in the past. But Canadian businesses get to benefit on the dollar, but consumers aren't getting crushed on the exchange rate. Because of how high the Canadian dollar is right now, we get to buy stuff in the US for cheaper. Now, on that theme, we'll be discussing that in a little bit. But we can see here the Douglas Porter, who's a chief economist at the Bank of Montreal, said that he believes the strength of the Canadian commodities like lumber could drive up the loonie even further. There's a lot of things driving the currency, but probably number one is just the widespread strength that we're seeing in the commodities markets. So he is contributing the strong Canadian dollar to commodities right now, and the fact that the market's starting to see a little bit of inflation, and in inflationary times, commodities do relatively well. So that's kind of why the Canadian dollar is strong in comparison to the US dollar. Let's take a look at a little bit of price action that happened last week before the announcement. So we see in this article, the Canadian dollar spikes as the Bank of Canada tapers QE. They're slowing down QE. That's what tapers means, if you weren't aware. So the Bank of Canada left the overnight rate unchanged. That's what we've been talking about. It probably won't change for a while. Originally, I was saying 2023, but we got some interesting news from Tiff Macklem saying it could be sooner because inflation is higher than expected. So they're tapering its quantitative easing to $3 billion. This is down $1 billion from 4 before. The recent rise in COVID cases had cast doubt on this action taking place, hence the Canadian dollar has jumped on the move. So we saw earlier heading into this news that people were bearish on the Canadian dollar. So they weren't anticipating this news. This from the Bank of Canada was relatively shocking because you had the largest province, Ontario, go into a lockdown. That obviously hurts economic activity to a certain extent. So people were actually short Canadian. But when this news came out and they said that they weren't going to be spending as much money, they'll be actually spending $1 billion less a week, that actually makes the Canadian dollar stronger because it's not as prevalent. They're not printing as much money, which is depreciating the value of the currency. So it actually ends up being, a positive for the Canadian dollar. And we can take a look here at this chart. And up until that news, we had kind of seen a stagnant day, and then all of a sudden, boom, the stock dropped or the currency dropped off the cliff, meaning that people started to get more bullish on the Canadian dollar, strengthening the Canadian dollar in comparison to the US. So let's take a look at the past year between the Canadian dollar and the US dollar, and we can see that the currency is up 16%. So the Canadian dollar has appreciated 16%, which is incredible. We'll take a step back and look at how the two currencies have acted since the chart goes all the way back to 2003, and you can see that there is ups and downs. Now, I know in the ETF Canadian hedged versus unhedged video, I said over the long run, there's no differentiation between you choosing one or the other. You can pick and choose. But if you were entering the market right now, you'd probably want to be choosing the US dollar one. And we'll show a comparison as to why I'm thinking that. But if we look at the end of the chart here, we see that the Canadian dollar has strengthened like we saw in the last year. But what I'm mentioning here, and the whole point, is that this is an opportunity for you to be buying US dollars. If you plan to vacation in the US, or if you plan on buying US equities, if you buy on US stocks right now, you'll be buying the US dollar for cheap and holding these US stocks for 10 to 15 years. Based on this chart here, the US dollar should get stronger over time. Obviously, as the economy starts to recover and they start paying back the debt, the US dollar should appreciate in the future. And as we've talked about in the past, the currency risk here is basically on the low end because the Canadian dollar is so high. So we'll take a look at the two S&P 500 index funds that we've talked about in the past. The first one is XSP. It's an iShares product. It is hedged to the Canadian dollar. The second is XUS. This is unhedged, meaning that there is no currency hedging that takes place. So we can see here the blue line is XSP. And the purple line is XUS. And the important point to note is that the XSP, although they're the same minus the currency, the XSP has outperformed drastically by 14%. And this is obviously due to the currency alone. There's no other factor. Now, when you go into the Warren Buffett of thinking, buy when others are fearful and sell when others are greedy. Right now, people are fearful for the US dollar. This is where, if I was holding XSP, I'd probably be looking to switch to XUS. If I was a short-term trader, again, like I mentioned, you want to be holding for the long term, but just to give you an indication, if you have new money, it would be good to look at something in XUS. Obviously, we can look and zoom this out, and we see that the 5-year difference is very minimal. And actually, XUS outperforms over the past 5 years here. But basically, all in all, it's a good time if you have Canadian dollars and you're looking to buy US stocks. If you're bullish on American equities, it's a good time to transfer over your Canadian into US. Now, if you're not familiar, there is a way to do this called Norbit's Gambit. So I'll throw down in the description the spelling on that. But take a look, Google it, see a way that you can convert Canadian to US in your stock portfolio for cheaper than the broker's exchange rate. Normally, they're going to charge you 1 to 2% in fees. There's a way that you can reduce this. But I hope you got some value out of this video. I hope you can see kind of the pattern of the Canadian dollar to the US dollar. And right now, with the Canadian dollar being so high, it's a good time to buy US. So I hope you enjoyed the video. If you're still here, please like and please consider hitting that subscribe button. I hope you all have a great week on the markets. Happy trading.